If you're sitting on the sidelines wondering what's going to happen to Brisbane property prices in 2026, well, this video is for you. I'm going to be talking through the fundamentals. We're going to look at the supply pipeline, and we're also going to look at the demand that exists for properties across Greater Brisbane. But let's first take a look at the properties that are currently available for sale. Looking at SQM research data, we can see that in Brisbane, since COVID-19, we've seen a rapid decline in the number of properties that are available for sale, and this is evidenced through total property listings. You can see on the graph here that between 15 and 17,000 listings has been the norm per month across all of Greater Brisbane, compared to the long-term historical average, which sits above 26 to 27,000 listings per month. Clearly, when there's fewer properties available for sale at the same time as heightened demand, you're going to see prices escalate, because this is the simple fundamental imbalance between supply and demand. Now, if we zoom out and take a look at what's happening across other markets throughout Australia, we're going to first of all focus on Melbourne. When we look at listing volumes in Melbourne, we can see that right now listing volumes are more in line with long-term averages. So Melbourne doesn't have the same supply crunch as we have here in Brisbane. Now let's look at Sydney. Sydney also shows a similar graph to Melbourne. In comparison to the long-term average, Sydney's listing volumes on a month-by-month basis are comparable to long-term listing volumes. Again, this is very different to what we're seeing here in Brisbane. If we now have a look at Hobart, we can see Hobart had a supply crunch in terms of listing volumes in the early years or months after COVID-19 hit, but supply is recovering throughout Hobart and there's more properties available for sale compared to what was happening just a few years ago. In Canberra, listing volumes are in line with long-term averages, and in fact, in the last 12 months, we've seen an increase in the number of properties that have been listed for sale in some areas across Canberra. Looking at Adelaide, Adelaide has seen a compression in the number of properties available for sale in a similar pattern like Brisbane. Perth also shows a compression in the number of listings that are available for sale, again in a similar pattern to what we are experiencing here in Brisbane. And what's really important to understand is that Adelaide, Perth and Brisbane are amongst the top 3 markets in terms of capital city markets throughout Australia that have had the strongest capital growth over the last couple of years. So this is in line with a compression or a shortage of supply or a shortage of listings that are available to buyers to purchase. Finally, let's look at Darwin. Darwin has seen a compression or a decline in the number of listings that are available for sale just throughout the last few months. And interestingly, Darwin has also been leading growth throughout the same period as their supply has been compressing. What does this tell us? There is a relationship between compressed supply or low listing volumes and price pressure in markets where there's strong demand for property. Let's now take a look at longer term supply of property here in Brisbane. A few things come into play when we're looking at how many properties are likely to be constructed in the near future, because supply is not just in short-term properties that are available for sale, it's also in how many properties are actually being constructed and delivered to the market to help buyers find a home. In Brisbane, in the last few years between January 2020 and December 2023, there's been a huge increase in the cost to actually purchase a house and land package. In fact, back in 2020, the median cost for a house and land package in Greater Brisbane was $500,000. Fast forward to December 2023, that cost had increased to $830,000. That's an increase of $330,000 in such a short time frame. This, of course, is contributing to barriers to produce brand new products because of price escalation. And we know just how much prices have escalated in the construction industry off the back of COVID. So this is causing some backlog in terms of the ability for builders to bring supply to the market. Not only that, But of course, government taxes property at all levels. When we look at the infrastructure charges, the regulatory costs for delivering greenfield houses to the market, between 2019 and 2025, we've seen a 106% increase in those costs in Brisbane to deliver new supply to the market. And that's in relation to greenfield homes. That's houses on their own lot in areas where there's an abundance of land supply. When we look at the delivery of apartments and townhouses, that's what we call infill development, the increase in government regulatory costs, taxes and infrastructure charges has been 68%. So back in 2019, $152,000 on average of the purchase price was made up in government taxes, regulatory costs and infrastructure charges. By 2025, that had increased to $256,000. So that's a big portion of the purchase price that's going back into government revenues at all levels of government. Now, of course, we do need to deliver more housing throughout southeast Queensland into the future. However, the type of housing that's going to be delivered will depend on the area where the supply of land and also the land zoning permits different types of development. When we look at the Shaping Southeast Queensland Regional Plan between now and 2046, we're going to see an increase in dwelling stock throughout southeast Queensland. And depending on the council region, the type of dwelling stock to be built or constructed will vary. You'll see new dwelling growth will predominantly come from detached housing, and they're largely in those greenfield areas. But that's going to be followed closely by high-rise attached dwellings and also low-rise attached dwellings. But let's actually take a closer look at different council regions to see what's happening in different areas. First of all, let's look at the Brisbane local government area. Because there's not a lot of land supply left in the Brisbane LGA, the predominant or the dominant type of new dwelling growth will come from low-rise attached dwellings. This will be followed closely by high-rise attached dwellings and then medium-rise attached dwellings. In the Brisbane LGA or local government area, we're going to see the smallest portion of new dwelling supply coming through as single lot homes. And that's relative to the fact that we simply don't have a lot of available developable land within the Brisbane City Council region left. Next council region of Greater Brisbane that we're going to look at is Ipswich. Ipswich has a lot of greenfield land, and we're going to see 69% of the dwelling supply between now and 2046 coming through as single detached homes in this region, followed by low-rise attached homes. So 69% of properties coming through in new construction in Ipswich in the next few years between now and 2046 will be detached dwellings. 27% will be low-rise attached dwellings. In Logan, again, an area where there's a lot of greenfield land, we're going to see 79% of future dwelling supply coming through as detached dwellings. That's homes on single lots. And low-rise attached dwellings will make up 18%. So not a lot of high-rise or medium-rise attached dwellings in either of these city council regions. Looking at Moreton Bay to the north of the Brisbane local government area, we're going to see the majority of properties that are built in this region coming through as low-rise attached dwellings, followed very closely by detached dwellings. So 49% of new dwellings will come through as low-rise attached dwellings and 45% will come through as detached dwellings in Moreton Bay. Finally, in Redlands, we're still going to see the majority of new supply in terms of construction coming through as detached dwellings, with 61% of properties being built in that space and 21% as low-rise attached dwellings. So what does this tell us? Depending on the different local government area throughout Greater Brisbane, we're going to see different types of dwellings being constructed based on land zoning and land constraints for those particular areas. If you're a property investor or a property buyer, this becomes relevant because the supply of properties coming through that are comparable to the type of property you're looking to buy may impact on the supply and demand metrics for that asset type. And if you need assistance, hit the subscribe button, follow our content, you'll learn much more about how to find a scarce asset to maximize capital growth potential in the future by following our content. Of course, there's going to be demand side drivers that we'll continue to see into the future as well. Stamp duty here in Queensland comparatively is more affordable to buy in Brisbane than many other capital city markets around the country. For example, at a median house price value of $1,022,000, the first home buyer stamp duty sits at about $32,000 here in Queensland. Compare that to much higher rates of stamp duty across other capital city markets, and you can see why property investors continue to be attracted to properties here in Brisbane because of the stamp duty benefit. Also, Southeast Queensland as a whole has seen this strong interstate migration that has been apparent off the back of COVID, and we're still seeing elevated levels of people coming into Southeast Queensland. Of course, everybody that arrives needs to find accommodation, so that puts pressure on the rental market as well as pressure on sales. More buyers in the market at a time where there's limited supply simply means that prices will continue to escalate. Of course, we're going to see rapid population growth, and according to Shaping Southeast Queensland, which is the regional plan for Southeast Queensland, we're going to see a population explosion. Right now in Southeast Queensland today, we have 3.78 million people, residents here in Queensland or Southeast Queensland. By 2046, we're going to see 5.94 million people reside here in Southeast Queensland. This puts enormous pressure on our population and of course means we need to create more dwellings, otherwise prices will continue to escalate. Now, of course, the population is changing as well. We're going to see fewer people in the lowest age group, that is children between 0 and 17 years old, whereas we're going to see more elderly people in our population, so the composition will change. And what is interesting from a housing perspective is we're going to see almost a doubling in terms of single person households. So we need to consider what types of households are going to see the strongest level of demand in the future, and that might give you some hints in terms of what type of asset might actually outperform when demand outstrips supply in the future. Of course, looking at the lending data, we can get a good understanding of the fact that in recent months here in Queensland, we've seen strong interest, not only from owner-occupiers, where lending has increased 15.1%, but also investors, where lending indicators have increased 12% over the last 12 months. This is really strong interest in terms of new loans being written to people that are purchasing here in Queensland, and it gives an indication of the fact that demand is strong and will continue to be so into the future. Of course, we can have a look also at where property investors are most interested to buy more recently, and the Australian Property Investor Magazine Property Sentiment Report for Q3 in 2025 has shown that Queensland remains as one of the best investment prospects over the next 12 months. This means that there's still plenty of property investors that are interested in placing their money here in Queensland, and there's definitely a lot of investors focused on Brisbane as a hotspot and a location to invest their money into the future. I hope that's been a great update for you in terms of what you can expect property prices to do in 2026. We've covered the fundamentals in terms of supply. There's such a shortage of supply as well as demand, and all of the reasons why we expect prices to continue to escalate in the months of 2026, simply because there's more buyers than there are sellers, and this will continue to put upward pressure on prices. We'll talk to you again soon, and bye for now.